All right, let's head over to the studio in the sky. Kunal Patel with the Dallas Federal Reserve. How you doing today, sir?
I'm doing great, Jason. How are you?
Oh, I'm doing well, doing very well. I appreciate the opportunity as the hot off the press as of yesterday. So it's almost white hot. That's when you know something's really hot off the press. It's white hot. Um, the Dallas Federal Reserve Energy Survey is out and about, and have an opportunity to go over it. So give us the lowdown. How many people were interviewed and surveyed, and what's the kind of the parameters of this survey?
Absolutely, Jason. Uh, Let me just give a quick background.
Yeah.
We conduct this survey. It's a quarterly survey. We survey about 200 upstream oil and gas firms located or headquartered in our 11th district. So the Dallas Fed is part of the 11th district that's defined as Texas, southern New Mexico, and northern Louisiana. So, we have the Permian Basin, Eagle Ford, Barnett, and the Haynesville within that area. And then again, it's quarterly. So we collected this data March 11th to the 19th. I just say it's good to know these dates because there's a lot going on in the global oil market. We had 135 energy firms respond. We had to break it down, 92 exploration production firms, and then 43 oil field services firms. And in our survey, we kind of have like three different parts. The first part is our indexes. What we use is we use diffusion indexes. If the index is positive, it suggests expansion. If it's negative, it suggests contraction. And it gives a quarter over quarter snapshot on a variety of metrics like employment, business activity, so on and so forth. Then we also have a special questions section, as these are timely questions that change every quarter. And then respondents have the ability to provide uh, commentary on what they're seeing. It just provides that window. In terms of our indexes, what you'll find is that in our latest quarter, they did report that activity increased. I would call it more of like a modest increase. Employment stayed flat. Production also very much flat. We did see an improvement from oilfield services firms. It's kind of like a shift from prior quarters where many of these metrics actually turned positive. Uh, and then overall, I would say the key point from the survey is that activity rose for the first time in almost a year. It was accompanied by a broad-based improvement in the operating environment for oil and gas support services firms, also known as oilfield services. However, the ongoing conflict in the Middle East has generated substantial uncertainty for firms about the near-term outlook. Let me just go quickly through a couple of special questions. I won't go through them all, and of course, I'll leave it open for Jason to ask questions afterwards. But some of the special questions that are of interest, we do ask a question about what price firms need to profitably drill a new well. Average across the sample was $66 per barrel. That's about $1 up from the prior year. But we can also break it out into large and small firms, with large firms being defined as producing 10,000 barrels a day or more, and firms producing less than 10,000 barrels a day. The larger firms need $59 per barrel. Smaller firms need $68 per barrel. Let me just do one more special question that may be of interest. We asked executives how the number of wells their firm expects to drill in 2026 has changed since the start of this year in light of recent oil price increases. Almost 70% of executives at large E&P firms who make up the bulk of U.S. crude oil production reported no change to their plans. However, among smaller firms, almost 60% have revised up the number of wells they expect to drill this year. And then we have, special questions around Venezuela, special questions around, which basin they think they're going to see U.S. oil production increase in, questions on industry consolidation, well recovery rates. But I'll stop there. That kind of gives a good overview of the latest release.
Did want to ask you about recovery rates. So, one of the things that the Bakken had was some surprise recovery rates. The depletion curve was a lot quicker than what they anticipated. So, I know that a lot of uh, companies they look at that. And then there's also the natural gas side of these recoveries too. Did you ask anything in there? Did you have any responses?
So it was more broad-based. We did ask the question, do you expect upstream firms will be able to increase oil recovery rates from U.S. shale wells over the next 10 years? And then how about for natural gas? And for crude oil, the generally overwhelming response was yes, slightly. There's also a portion that said yes, significantly, but there was some, I got to get the exact percentage, but it's between like 15 and 20% that said recovery rates will decline. There was a small portion that said no change. Now, I think what you're mentioning is, you have a well and you have a view on how that well will decline, and then what they did was that when they looked back at the data, when they looked at the data in the future, they saw a bigger decline that was than what was expected. Recovery rates, I think, are a little bit more of a, whatever oil is in place, how much of that will we recover? I've seen uh, you know, numbers between 5 and 10% currently for shale. And then, the question, of course, is can we increase that in the future? It is kind of a hypothetical question 10 years in the future. I think that if you look through the news over the past 2 or 3 years, you've seen, you know, firms talk about uh, the ability to increase oil recovery rates. But I should mention there was a comment in there that mentioned something like, it's not about increasing recovery rates, it's about economically increasing recovery rates. And so I think that might be another big question because it may be that you get the 10%, but getting that 12% may be very expensive.
Well, that was my next question was basically about innovation because the comment is right is that it doesn't matter what it is at the end of the day if you're not making a profit. And so we take a look at the supply chains. Okay, are there delays in anything? Are tariffs coming in? Do the supply chain prices have they increased with the inflation? To me, that's a bigger part of that recovery rate than a lot of other things. And when you take a look at even up in whether it be the Bakken or some of the other areas that are doing the hydraulic fracturing, a lot of that recovery rate based on both definitions, whether it be on the dollar side or on the production side, still has to do with innovation. It has to do with how quickly you can innovate to either capture the gas or frack or go 2 miles instead of 1 mile to 3 miles. Those are other ways that are played into it. So in that spaghetti up against the wall question I just gave you, are there anything like that, supply chain prices or delays or innovation mirroring or anything like that in the survey?
So we do have various indexes around like supplier delivery times, but there wasn't really, I think the index was, I think, close to zero. Let me look at it quickly. It was like it was defined as close to zero. There was
I
really
haven't heard
most.
much in terms of inflation being like, for a while there, it was double, diesel prices doubled in like a month. And all of a sudden, steel prices were over 6 months were almost double what they were before. And then you started hearing the construction people complaining because that impacted nails. And you understand, and once one thing goes up in price, it has a slow trickle through. And so when a couple things impact the price, it can really impact. But I haven't heard anything for outside of grocery store inflation, I guess.
Yeah,
Um,
you good point. I mean, the big one was like in 2022. We had a lot of
yeah,
inflation in the oil field, and that's come down I think significantly. Like when we look at these cost indexes, they did move up a bit, but they don't seem to be what would be defined as incredibly elevated. They're just, I think if I was to pull the series average, we'd at least be pretty close to it. But there was a little bit of pickup in cost inflation. Now, when we drill it down, though, you see the increase is in the index, which is called finding and development costs. And so it may be that with these higher prices, there's, this marginal increase in activity, or on the oilfield services side, there's a demand for their services. And so that might be causing a little bit of increase in the finding and development cost. But that index is still lower than the lease operating cost. And so I think you hear a little bit more about like water disposal cost or electricity cost. These are all that fall under lease operating expenses. And that index is still higher than the finding and development cost. So I think we've seen a little bit of pickup but
Hmm.
still, these are not like alarming levels at all.
One of the ways that companies are saving money is through artificial intelligence, whether they're using it on HR or using it on compliance or even the centers with the smart pigs and drones. Artificial intelligence can come in a lot of different ways, but it's also creating some new problems and issues for communities. But on the flip side, actually, this would be a triangle now. So I guess I got to bring out my Dungeons and Dragons dice and get my four-sided dice out because we're on the triangle one here. Because companies like Target Logistics, which is now Target Lodging, I believe, they're really benefiting on this AI expansion. I saw that they're housing a lot of the temporary workers that are building these things, and so the oil and gas industry was kind of interesting for a while because some of the AI data centers were having to find their own power. And so they're reaching out to the oil and gas companies and saying, can you put like a power center in my backyard, natural gas or whatever, And so anything on AI on this survey, anything going on? Was it mentioned? Um, it's didn't quite have the news like I thought it would this year. I mean, it's a little bit, but not much.
So I think that there is, um, let me at least see if I can find it really quick. So there is a comment. Again, I always say these comments, we don't endorse them. They provide a window into thinking of the executive, and they just wrote lead times for large horsepower engines is now 100 plus weeks. Now again, and he mentioned these are industrial engines for power generation. And the fact that, the demand for these is outpacing the supply. So just like you mentioned, uh, data centers calling oil and gas companies, can you get me power? I think one of the biggest challenges, of course, is the lead time for these large horsepower engines. Now, more specifically to your question on AI, we did ask a question in the last quarter, so that's the fourth quarter of 2025. We really want to see, will AI make a difference in terms of the break-even price for new wells? So we asked the question, by how much do you expect artificial intelligence to lower your firm's break-even price for new wells in dollars per barrel over the next 5 years? What we found was that the larger firms were more likely to say yes, there will be an impact. So larger firms again are the 10,000 barrels a day or more. 25% said no impact or $0, but then there was 38% that said between 0 and 1, 25% that said between 1 and 2. Whereas for the smaller E&P firms, 70% said no, there'll be no impact, and then with smaller percentages saying some type of impact. Now, the reason why we asked this question is that we did ask an AI question back in the second quarter of 2024, and we've not revisited it because we feel like we got enough insight from it. And that one was talking a little bit more about asking, firms, are you using AI or not? And I think what we found then was that about um, let's say 25% are using some form of AI, and this was back in 2024. Another 25% said, we'll do it in the next 12 months. And then 50% said, absolutely not. We have no plans to do so in the near future. Now that might have changed by now, but again, I think that that was kind of telling of, there's a quarter that is doing it, a quarter that's thinking about it, and a half that's just we're not going into AI. And then we were looking at what are the different things that they're using it for. The number one thing was business analysis and or predictive analytics. Then it moved to process automation, then geology or reservoir engineering, then predictive maintenance, then supply chain optimization, then drilling and completion. So that's the one that's key for that break-even one, right? Along with that geology and reservoir engineering, those percentages were much lower than something as simple as business analysis or predictive analytics, then accounting, and then other. And I think the idea we got from is that there are firms that are using it. They're finding that they're getting some additional productivity boost. They're getting more timely information. Maybe they're getting some type of reduction in cost. But at the end of the day, it seems like it's the bigger companies that have the scale to do so. And at the end of the day, our the big question is, will it actually lower that break-even cost? Because there's such a savings. We do know that there's, I think what's generally mentioned is predictive maintenance, like knowing when your pump may go down. So let's do the maintenance before, rather than having lost revenue. By fixing it, there may be that downtime, but then if you have an extended downtime, you have a bigger loss in revenue. And so the understanding is the industry is moving in that direction. It's more for the larger firms. The big question, of course, is will it impact the ability to drill and complete better wells, which would then reduce the break even. And so we haven't revisited the 2024 one because we thought we got enough from it. It could be that we may revisit it one sometime in the future, but at least right now there's not that plan.
Is there any sort of categorization of AI? Like, do they have AI broken into what technically would be considered AI? Because when you were talking through some of the different special questions and some of the comments, the smart ass snarky side of my head, which I'm a Libra, so I go back and forth. I go to the Mr. Polished, show up on time every day, and then Mr. I'm out behind the in the detention center type. Uh, AI, I mean, my phone is AI. And, I could argue that my alarm clock is AI. And so when an oil company talks about we're not going to use AI, I'm thinking, oh, so you're going to go buy 1967 Chevy pickups. Got it. Okay. So you're getting rid of your pickups. That's not what they're talking about. And that's not what, we're talking about. And so that's when my snarky mind has to go to, okay, my journalist trained mind. Okay, does the Federal Reserve or Congress or the Energy Department, or I don't even know where AI falls under, to be honest. If it's nuclear regulatory, I know. If it's, I mean, so I don't even know where AI falls under. That's how cutting edge one could argue this is. Do we have any sort of, corralling categorization of AI yet, or no? Or yes, I guess, I don't know.
I mean, like categorization into like traditional generative, we did ask, like which one are they using more of, and for the traditional side, at least like at that time in 2024, there was less people using generative AI versus traditional. That's because the industry has been using traditional for quite some time. And traditional is just like machine learning, right? They look through all the wells and try to figure out something new. And then, of course, the generative AI is the new thing, the ability to talk to AI. And so I think that's where, like, if we were to run this question again, I'm hopeful that you'd have a higher percentage that's also been jumping
That's
into
what I
generative
thought.
AI. The
Yeah.
ability to talk to it, you've heard of AI agents. This is all part of the generative AI versus the traditional AI. That's the cutting edge, the new
Hmm.
thing. Before it was just kind of like, we don't know how to talk to it. There's data science people that run it, but the idea with generative AI is the ability to talk to it. And
So
so
are you familiar with agriculture AI, how this is working out there? So,
I
okay, I've been tracking drones since 2008, and some of the smart farming and that sort of thing. And so, where we're at basically right now is, back in 2008, they had drones the size of honeybees that were being used. And so you can imagine where we're at today. And the idea behind uh, real time AI farming is that you've got something flying over your crops once a day or twice a day or whatever. And it identifies the individual disease and pathogens on leaves and plants. And so that would be AI one, generation one, I guess. So AI two is what we're at right now, which is now we're communicating with something preventative. And so the next generation then is telling that little honeybee drone to come out to those plants and perfume mist the leaf. And what that does is it saves 95% on pesticides, it saves 95% on water. You see what I mean? That's the in a perfect world type of a thing. And with agriculture, it's really easy to understand because you've got all these AI nodes that are they're being planted in the seed. My understanding is in the polymers. That's how much they've got the nanotechnology down to. But, 10 years ago, it was a little 4x4 that would run out in perfume mist. Now it's, the little honeybee type things they've got to where they can have enough of like I say, enough pesticide or pathogen or whatever the herbicide is to take care of it. And it's all they need is a dropper of mist. They don't need to spray anymore. I see that, with the oil and gas industries, that's what we're talking about is that will be the next adaptation, correct? That we're at the problem solving of, okay, the furnace or the boiler or the generator needs work, and we have humans that are doing that work right now, but the next generation of AI is going to be, no, the robot's going to come and just do it. And right, that's where we're going, right?
I always tell people to be open-minded and look for it because innovation is currently happening.
Yeah.
The thing though is that I'm unsure if it's happening at the scale that you mentioned in agriculture. Like I think that you can find examples of some type of robotics in the oil field. But I think that this is a topic that's come up over the last like 5 to 10 years. And so I think it just takes time. I think that the industry is moving in that direction. At least with agriculture, everything is above ground, but with oil and gas, a lot of it is below ground.
Mm-hmm.
And so that's why we asked the question on AI for 5 years ahead because we didn't want them to have the expectation that it was supposed to be done in the next year. Will this eventually occur? That was kind of the idea. And I think you can find some videos about like ways to use robotics within the oil field, but I think that like some of it's just more of like an automation or just some way of it helping out the oil field worker. Um, it's
I
always
could
unclear.
even see it where, like with the preventative thing, for example, they could drone parts out to an oil rig instead of having somebody drive it out there. And that would be the next generation because it would be probably faster, it'd be cheaper, you'd be using less resources. You know what I mean? Like to me, that's where we're going, is that there's going to be a thousand ways that AI can solve your problem, but it's going to take a combination of different levels of AI basically to talk to each other. I think that maybe is where the question where we're heading next. But anyway, sorry to interrupt you, but go ahead.
The idea is that I think AI allows you to be creative in different ways to solve problems. I'm unsure what the weight is of this equipment that is needed for the maintenance. That's why I'm not sure. Can you drone it out or do you have to drive it out? But if it's small parts, then maybe you can drone it out.
Hmm.
But I've heard that there's many different creative ways that companies are coming up with due to AI, due to the ability that you have all these different ideas or access to data that you can come up with a faster solution.
And that was always the issue with some of the AI trucking, because actually the autonomous trucking's been around a lot longer than autonomous taxis. But they basically could only do the straight shots, and then somebody had to take over once they would get into like a city or get into more of a non straight on road type of a stretch and that sort of thing. But anyway, it's interesting, the baby steps and that sort of thing. I was interviewing someone 2 days ago, and one of the things that they were talking about was, when the oil and gas industry basically saved the whales because we went off whale oil to kerosene, but we were still dumping gas down the river because we didn't know what to do with it. We just wanted the kerosene. So even that innovation took a while. You know what I mean? Like the good news was we saved the whales, but the bad news is we created a new problem we don't understand yet. And so anyway, that's why we were talking before about some of the different podcasts and some of the different reporters out there. That's why it's always good to let things breathe a little bit, because then you can examine what the topics are a little bit, because that's the one thing that AI is allowing: a lot more solutions, to problems that, that there's not only one way to fix things anymore. And anyway, so I'm starting to get up on a soapbox here, but okay, let's get back to our topic here. Venezuela, I wanted to ask you about too. You mentioned there was a topic on Venezuela in the survey, and I wasn't aware if there would be because I didn't know if we had the Venezuela news at the time of the survey, but it sounds like it. So the survey was done last quarter, correct? Was the fourth quarter basically was like the October was so this straits of in the Middle East, that's not going to be in this survey, but the Venezuela stuff would be, correct?
They'd both be. So I was
Oh,
referring to a prior survey from December,
oh,
but
I'm
like
sorry.
for our
Okay.
current survey is from March 11th to the 19th. So
Oh,
it's
this is really recent. Okay,
very
here I
recent.
thought I
So
was dealing with like last that. Okay, so Venezuela and some of the Middle East conflict, whether it's new shipping routes through different straits, or whether it's just the Iran portion of it, or whatever it might be. Just yeah, some of the geopolitical stuff. How does that rank on the survey?
So for Venezuela, we asked the question, how have your expectations changed for Venezuelan oil production over the next 24 months when compared with your expectations 3 months ago? We just wanted to get a flavor of how are they thinking about, what's happened over the past 3 months in Venezuela. What does that mean for their expectations of production? And we use 24 months because it does take time in Venezuela to kind of change that production path because it is more of a longer life investment. And the most selected answer was expect slightly more. That was about 55% of executives, followed by expectations unchanged, and then expect significantly more. So overall, the executives felt that we were on a path to more production in Venezuela over the next 24 months compared to 3 months ago. We didn't err on asking questions about the Strait of Hormuz because it's one of those topics where there are a variety of different things that could potentially occur. And given that most of these executives are focused on their operations, which are largely in the United States, we didn't feel like it would be the right question for the executives. But there is a variety of comments which you can review through. And I guess they talk a little bit more about uncertainty, but then they're going to throw in the Iran war or the Strait of Hormuz. And so there are quite a few comments on it, and it kind of all just funnels back into uncertainty. I think that many of these executives are experiencing an elevated level of uncertainty, and that elevated level of uncertainty kind of makes it hard for them to know where the industry will be in the next, let's call it 2 to 3 months. So it definitely clouds their near-term outlook.
So I'm not trying to be political with this question, but I'm not sure how to even ask a question without it being political when you're talking about Middle East geopolitical energy. Um, did anybody comment, or are any of the comments regarding Qatar, which the United States has invested heavily into from an infrastructure and trading partner side, or protection of, say, Israel, or protection of countries? Is it more from a protection of politics or more of a protection of the energy infrastructure? Does that make sense?
It makes sense. I recommend reading through each of the comments. Again, we don't endorse them. They provide that
Right.
additional window. I think the topics that you mentioned aren't within those comments. The
Okay.
comments tend to be a little bit more broader based about how
But there's
the
nothing on Qatar, for example, which would be,
I don't believe there's
I
anything
didn't see
specific.
anything either. And so that's why, yeah, because to me, that's, one of the main reasons why we care about the Middle East is for our investments in Qatar, but then also obviously for a lot of the political reasons and that sort of thing. So, okay. Didn't want to get you in any trouble there. So I didn't want to dip my toe into a little bit about that. Okay. And the other question I had, the Utica made an appearance in the energy survey coming out of Dallas. I noticed that. And then I actually took a look at why. And it's from the question, of which basins or regions do you expect U.S. oil production to increase over the next year? And the Permian was number one at 82%. The Eagle Ford and Utica each got 29%. Is that normal to get other plays like that? I see Louisiana from time to time. I'll see the Haynesville and Eagle Ford mentioned. I might even see the Mid Atlantic from Oklahoma or the Scoop come up from time to time. I don't remember seeing the Utica come up much in the Dallas Federal Reserve. I know I haven't seen the Bakken come up, so I don't even remember seeing the Niobrara come up. Is that common to have other shale plays like this or energy plays come up in the Dallas Energy Survey, which covers basically Louisiana, Texas, New Mexico, Oklahoma?
So this is the first time we've asked this specific question, and we
Okay.
asked it because we're kind of going into this new year, and it's kind of unclear, will U.S. production grow and where will it be? I think the reason why people might raise an eyebrow is that like Utica is a play that maybe produces, I don't know, 150,000 barrels a day. And it was ranked, it was tied with the Eagle Ford, so I guess the number two spot. But the Permian is a very large play. The Eagle Ford is, they're tied with it. There's U.S. offshore, Uintas after that, Alaska, Williston, and then Denver, Julesburg. And so I think what's changed a little bit in Ohio is that we've seen production be very steady, but over it's either the last year or the last couple of years, you've seen an increase in Utica production. And so quite a few respondents expected that, that we may see, it's still below 50% though. It's 29% of respondents expect an increase. It's kind of hard to say what that means on net because you could be thinking that it's going to be a no change or you could be thinking it's a decline. But I think that there's probably something that's changed in the Utica that is making that expectation. It could be just simply be that you saw a production increase previously and you're going to see it again. I think when I look through the Utica, you kind of see the individual wells, their EUR is a little bit higher, but then it depends on when you adjust it by lateral length. Is it actually an increase or it's just the fact that they drilled a longer lateral? But again, I think again, like you mentioned, it was kind of eyebrow raising. I don't know if I would have expected Utica to be so high, but it did tie for the number two spot. Williston is on there, but Williston was unfortunately a little bit lower than 10%. It's always hard to say. Also, like most of our sample are producers that are probably within the Permian Basin. I think you can kind of judge that from our break-even question. Um,
I didn't
and so
hear Haynesville in there, by the way. Was Haynesville in there?
we didn't put Haynesville in because Haynesville is a very much a gas play, and so this question was around oil production. So the amount of oil that's produced out of Haynesville has to be quite small.
Well, that's where my confusion comes in because the first thing when I see Utica, that's a very big gas play. The Marcellus Utica Basin, that's a huge gas play. And with the AI centers that are coming in, natural gas is having a very um, good outlook for the future. And so a lot of their uncertainty is becoming certainty. And because a lot of, like I was saying, whether it's Trump or whether it's the states, there is a articulation and push for, hey, data centers, go find your own power. And whether that's going to happen at the end of the day or not is irrelevant because a lot of data centers are saying, well, let's go get these natural gas things. And so I've done several interviews out in the Marcellus, and it's gas centers, of course, are being pushed out there. So that one made sense to me. But when I saw the Eagleford in there, I'm going, well, that's not that's not as much gas as the Haynesville. But now it makes sense because you're talking oil production. Um, so which makes that Utica one even more interesting because as you mentioned, I think it's like what 150,000 barrels a day or something like that. It's known because of its natural gas. It's not for its oil production. So um, anyway, that's
So the
interesting.
reason why the reason
Yeah,
why it's interesting is that I always thought of it as a gas play, and then I
yeah.
saw Ohio production increasing, so I looked into it, and that's why I don't want to say conclusively because I looked through it quickly, but it looks like some of these wells are having more oil production, right? And so that's
Hmm.
what's driving up the production in Ohio. And Utica is very much a gas play. I think that Utica's always had like a higher liquids kind of region that's different than like Pennsylvania, where the northern part is very much gassy and
Hmm.
the southern part is a little bit more liquidy, but not like crude oil liquidy. And then the Ohio was the where you could actually get like I think it would be defined as condensate, very light oil. And so it may be that what they're finding is they're able to produce a lot more just oil and so maybe that's what kind of drove that expectation. But we included in because oil production has been increasing in Ohio. That's why we included it as one of the options.
Still interesting that it was that high. Anyways, that caught my eye. Like I said, normally they're down a lot lower than that. But well, other than that, the only thing I that stood out to me as I skimmed through this, I didn't really read it. I skimmed through it. Was wasn't much that stood out except for Sacramento orchestrated political roadblocks. So I could see a new vernacular behind how people are saying the word uncertainty. And so it's that sort of thing. I didn't get as much political uncertainty on this one that I got on the other ones. Where did we land on a lot of the different, the states are trying to keep us from drilling and we want less regulations. I didn't really even see much on the emission side of things. Was there much on too much oversight or overreach?
What I can say is again, the comments very much their individual viewpoints. The a lot of the uncertainty is around the situation in the Middle East. I mean,
Yeah,
I think if you read through each of the comments, they're very much just that's kind of the focus. Past that, though, I always say a comment can be interpreted in multiple ways. So that's why I always invite listeners to read the comment, kind of come up with a view on it. But they're very much concentrated on the Iran war, the Middle East. That's where their uncertainty looks to lie.
that's interesting because a lot of the uncertainty talk came out of Venezuela, and yet the company's going down there. We're investing down there, so that uncertainty kind of went away, and all of a sudden now it's in the Middle East. But anyway, that's all righty. Well, that's really almost all I have on this end of things. What's kind of the final take? What's the final walkaway that you want people to take from this survey study?
Sure, I think at least as of the middle of March, many of these firms are um, they are increasing their activity, but I would define it as modest. There is this sense of uncertainty because there's a lot going on in the oil market. It's unclear which direction it's going to go. I think that over the next 3 months, hopefully we'll get a little bit more clarity on the direction of the oil market. And then, of course, how firms will want to place themselves within that outlook. We will have our next release in June. So the release date for that is June 24th, 2026. Of course, we'll have a new set of special questions. I invite listeners to go out to the DallasFed.org website. You can read the full release. You can look at our historical releases. We've been running the survey since 2016, so it's been a decade. Uh, and so it'll be interesting to see, which direction the oil market goes, and then of course how it impacts firms within our district, and of course also the United States.
Fantastic. Thank you for the time, man.
Absolutely.